The billionaire investor Warren Buffett just sold 100% of his shares in this one specific company, and this just happened a few days ago. That's what we're going to get into in this video. If you want to hear about that and what it means, should you buy it, should you sell it because of this, what does it mean for the company moving forward, we're going to get into all that. But first, I'm Austin. Thank you for being here. We're in the 140 subscriber range, looking for that 150 number. So if you're one of those people, thank you so much. If you're not, go ahead and hit that subscribe button as a thank you. Here's my two cats looking out the window. There's Luna and there's Millie. They're so sweet. Hope you enjoyed that picture. All right, stock that we're talking about is a luxury furniture maker, and it's called RH, and it's Restoration Hardware. If you haven't heard of Restoration Hardware, it's a super high-end furniture company. And when I mean super high-end, I mean like big dogs, like thousands and thousands of dollars for a dresser or a couch or a table, okay? And like just little like side lamps cost like 300, 400, 500, 600 bucks. It's insane. They also have these rooftop restaurants in these superstores that they have, and they're super good. I know it sounds weird to have a restaurant in a furniture store. Trust me, don't knock it till you try it. It's an amazing atmosphere, and it's absolutely beautiful. But Warren Buffett's company, Berkshire Hathaway, held over 10% stake in Restoration Hardware. And this was a big deal to a lot of RH investors because they think, you know, when Warren Buffett has a stake in your company, especially a stake that's so big as like 10%, that's a huge deal. That's a big feather in your cap as a company where you can say the best investor in the world, the GOAT of stock market investing, put his trust in this company so much that he bought 10% of all shares of the company. That's a big deal. And Warren Buffett's the type of guy to not panic sell. And when stocks go down, instead of selling into the weakness, rather he buys into the weakness. And it kind of puts this floor underneath all these Buffett stocks. And that's why everyone loves to own a Warren Buffett-backed stock. So you see all these articles, Buffett-backed stock does this, Buffett-backed stock does that, Buffett-backed RH. They said that all the way up until this week. News came out that Warren Buffett's company, Berkshire Hathaway, sold all of their shares and the stock was down huge. It bounced back a good amount the next day. It's up here again today. But what does this mean for the company moving forward? Well, first of all, we got to look at the valuation metrics. So a few quick valuation metrics are that the market cap's 5.7 billion. We have a trailing, meaning the last 12 months, PE ratio, price to earnings ratio of 12.99. If you look at that number alone, this looks like a steal deal. But as we look a little further, the forward PE, since the luxury housing market and the housing market in general has been in a rough spot, and it's going to continue to be in a rough spot because of all these rate hikes, as the rates go up, real estate market gets weaker, forward PE is looking like a 24 on this company. That's a double up from here in terms of the valuation. So it looks worse on a forward basis than a trailing basis. That's a red flag from an investment standpoint. Price to sales ratio 1.9, that's pretty high for a furniture company. Price to book 7, that's also pretty dang high for a furniture company. As we look at the growth, this stock is going to be in a very rough spot, I would say, for the next at least 12 months, if not 18 to 36 months, which would be a year and a half to 3 years. So if you are okay and comfortable with the volatility that is going to be implied in that, maybe a lot of extra downside, I feel like this stock could easily go to 200 bucks. But if you believe in the company enough over the long term, you can see this as a buying opportunity, and you can kind of buy into that weakness if you believe in the company. If we're looking at growth rates though, looking at revenue growth rates, sales on a quarterly basis look like they're going to be down 24% this quarter, 20% next quarter, 8% on the full year. And then next year, they're going to get back to revenue growth of 8%. But if you look at that and you think about it, if we're down 15% this year and then up 8% from that next year, that's still down negative 7% on a 2-year basis. So that's not looking great from a revenue standpoint. So that's definitely going to hurt the bottom line in a massive way. That's why that forward PE looks way worse than that trailing PE. I do think Restoration Hardware is a very well-run company, and I think the management has got their head on straight, and wow, they fill an awesome niche in the luxury furniture market. When we take a look at gross profit, the cost of revenue is declining at the same time revenue is declining, so that's good. They're not getting double destroyed in terms of like inflation absolutely destroying them and cost of goods rising that much, but their revenue is decreasing, and that means the gross profit's going down on a quarterly basis. At least right now, there's a lot of weakness in the short term. When we look at the balance sheet's in a great spot. They've got $1.5 billion in cash with only a $5 billion market cap. That is a big deal. That is a very well capitalized company from a cash to market cap standpoint. Moreover, when we check out the current debt on this company is less than $1 million. That's crazy when they have 1.5 billion in current cash. So that's amazing to see as well. So balance sheet's looking like it's in a great spot. When we look at the long-term debt situation does not look great for RH, that's for sure. 3.6 billion. I would have to look into the financial statements to see when this debt is due, but just on first look, 3.6 billion in long-term debt is a little worrisome, especially since their net income is declining, at least in the short term. As long as they can get that net income to rise again next year and the year after, they'll be fine. They can service that debt. They have that 1.5 billion in cash right now. As long as they use that in a wise way, one of those wise ways would be paying off some of that long-term debt, then this balance sheet will stay in a great spot. When we look at the statement of cash flows, they have been free cash flow positive for the last 4 quarters and more before that as well. So free cash flow looking great. It's nice to see free cash flow positive, EPS positive on a GAAP and non-GAAP basis, of course. And then on top of that, seeing that gross profit number rise on a regular basis. So more and more of that money is going to go ahead and hit the bottom line as we look from gross profit down to net income. I think RH is a look at it, put it on your watch list. In my opinion, if the stock drops below 200, it's a heavy buy. If you want to build out a position, I'd say put 10% of your money in now, watch the stock, see if we get any weakness in the short term, 10% more, any more weakness, 10% more, any more weakness, 10% more, etc. If you're wanting to build out an RH position over time in your portfolio. I think it would be cool to have a furniture play, especially on the luxury side. I really don't have any luxury goods stocks that are in my portfolio right now, so I definitely have RH on my watch list. I'm keeping a really close eye on it, watching those quarterly numbers. I've been watching it for about 9 months now. I have not opened a position yet, just full disclosure, but I am looking at the company. It made me a little worried when I saw that Buffett sold this stock. If I was an owner of this stock already, Buffett's decision to sell would not have made me sell as a shareholder. Also, if I didn't own the stock and Buffett bought the stock, I would not make that decision to buy just because Buffett bought a stock. There's so many reasons to buy a stock and go into a position at a particular time, but one of those is never going to be someone else bought the stock. That's never the reason I'm going to buy the stock. I'm going to buy the stock because I feel like I can put together a thesis over the next 1 year, 3 years, 5 years, whatever time horizon I'm looking at. I see a particular percent gain and a lot of catalysts to reach all their goals that I think they can reach over the coming years based on my analysis. Part of my analysis is looking at the holders, but I'm definitely not making an investment decision based off someone else holding or buying a stock. Just like you shouldn't make an investment decision from someone on YouTube buying a stock. I wouldn't make an investment decision from the GOAT investor, Warren Buffett. I'm not making a decision just because he bought it, I need to buy it. No, totally different. We're at very different stages in our life. He owns a multi-billion-dollar company, more than $500 billion. He's dealing with big money. He has to be way more risk averse than I do. He's not going to be going buying a small cap stock. No way. Okay, if I want to do that, I can do that. But Buffett doing that is not even an option. So I'm not going to base my investment decisions off anybody else, not even Warren Buffett, the GOAT. Hope that helps. Make your own investment decisions, do your own research. Don't buy because someone else bought. Don't sell because someone else bought. You make your own decisions. Go out there, make some gains in the stock market. Have a great day. Thank you for tuning in.